Yo, what's good with y'all boys, man? Today, we're going to be getting into the strategy that made me 50K P&L in 6 weeks on Top Step using 5 Express accounts. Very simple strategy, but I'm going to give you guys the in-depth run. Just a few things I want to say before getting into the strategy. Make sure you guys check out Lifestyle Trading Discord. It's completely free. The link will be in the description, and it's also in my bio if you guys would like to join. I post all of my trades, all of my account P&L. I posted everything I've done for this whole entire run in this chat, and they've seen me do all of this. And I've also dropped all of the stats on TikTok. Make sure you guys check that out. One tick off, show all my accounts, P&L for the day. So you guys should go over there to check all of that out. The reason I'm not showing this on Top Step right now is the servers are actually down, which is sad when I was trying to record this video, so I can't even bring up the P&L. It wasn't letting me access it, so I'm sorry for that, guys. Today, video, we're going to be going into a quick rundown of the basic things you need and just guiding you guys through it. And then from there, we're going to go into some screenshots to see how some recent high A+ trade setups played out. And from there, that's pretty much it, man. Let's go ahead and get onto the charts. So the first key thing you're going to need is liquidity sweep. What liquidity sweeps are you looking for? Data sweep, session sweep, previous day sweep, high time frame PD array sweep. Let me get into a little bit in depth of these. Data sweep. What is a data sweep? Let's say we get 8:30 news, CPI. We have a high data wick. We wait for price at 9:30 to push up, inverse either a high or low of a data wick. We wait for an inverse. We take that trade and we target either the previous data wick low or high if it hasn't been targeted, or we find another draw on liquidity. Next, session. What is session? London session, Asia session. We mark out the liquidity for London and Asia session. We wait for a liquidity sweep of either a high or low from the session. So whatever London high was, whatever London low was, those are prime liquidity levels where you're going to be waiting to get swept out. Previous day. So you go on the day chart, you mark out the higher lows, you find the higher lows from the previous day. Those are also key liquidity levels that price likes to inverse off of and have a good reaction. And lastly, but one of the most key things, high time frame PD array. What is a high time frame PD array? High time frame PD array is a premium discount array, high time frame, so a high time frame fair value gap of the 4 hour or 1 hour. So we're looking for 4 hour or 1 hour unfilled or day gaps also. Unfilled or a 4 hour PD array with the swing high inside of it. So let's say we have a 4 hour fair value gap with the swing high resting inside of that gap. We want to see a sweep of that swing high and an inverse off of that. Price loves to rebalance off of those areas. And those are very, very key liquidity levels that you guys are going to need. And from there, number 2, low time frame IFVG. So that's going to be our entry model. As soon as we get a low time frame inverse fair value gap, that is when you're going to go ahead and enter your trade. What are we looking for? 1 minute, 2 minute, 3 minute, 5 minute. 99, like 80% of the time your entry will come off the 1 minute. So what do you want to do? Let's go ahead and mark this out for you guys. We have liquidity resting in the market. Obviously, the market does not move like this. This is a perfect structure of how we want to see price come. Some days are choppy, but this is overall a day you would want to see. So where is liquidity laying in the market? We created a low here, liquidity laying there. Liquidity resting high. So like I said, we have our liquidity sweep. This could be a data sweep. This could be a session sweep. This could be a previous day. This could also be a resting low inside of a high time frame PD array, or this could be a wick to start of a 4 hour. A lot of liquidity, a lot of orders laying in this area right here. This is the level we have marked out. We've acquired our liquidity. Now, from there, low time frame IFVG. If you don't know what a fair value gap is, make sure you watch a YouTube video. Now, we've put in a bearish gap because we're on a bearish trend, as you guys can see. And I know this isn't a real example, but we're going to go into screenshots for you guys to break it down a little bit better. But as you guys can see, we've created a bearish low time frame FVG. Price inverses it, closes above the FVG whenever we're in the live market. And that's where our entry would be to target the draw on liquidity, whatever high this is. Yet again, that high could be data high, session high, previous day high. a high time frame PD array high, or it could just be an area that you think a lot of orders are resting, and you know you already meet your target for the day. So this is a draw of liquidity. And also off of these draws, we would want to see price then inverse back to the downside. So once we sweep out our draw, we can hold runners, but once we see a IFVG, that's when you want to go ahead and exit, because that's the opposite of your strategy. From there, your strategy is saying price is going to reverse. So we let runners run. We hit our draw 99% of the time. I'm cutting out draw liquidity. This is already going to be when this strat runs 80 to like 150 points, or it could be you just get a quick 50-point day. It really depends on the day. So low time frame IFVG, that's going to be your entry. Now, key things to keep in mind. We need a V-shaped recovery. When I show you guys these examples, you'll see exactly what I mean by V-shaped recovery. We don't want to see just some chop. Like, this is what beautiful PA. Chop looks like we create a low, we come up, we push down, we're chopping, we come down, we chop out the low, and then we continue down. As you guys see, I know my drawing's terrible, by the way. I'm trying to explain this a little bit for you guys, and you definitely need to have market time to understand this. This isn't just a idea you will understand if you don't have any market experience at all. So this is definitely not beginner friendly. But as you guys can see, we chop around, we're chopping at this low, we chop and get an inverse. I'm not entering that. I want to see a clean inversal off of that liquidity. My bad, boys. Let me go ahead and get this off the screen. But we want to see a clean inverse, and that comes in with volume. Next key thing. So V-shaped recovery, and I'm going to show you guys all of these examples. I have 5 examples for you guys from the last month. I wanted to do recent examples. There's crazy examples I could show, and I will soon be releasing a document to the Discord documenting the last year of A pluses. So that will be coming very soon in the Discord for anyone who's in there and wants to see that. But V-shaped recovery, very key. Volume. Last week, you would have got killed if you didn't stick to this room volume. Volume, like I said, the example I just said where we're chopping and it's not V-shaped. You need to see price have a strong buy side come back. So let's say buy side or sell side. Right here in our example, this is a buy side play. So whenever we're coming down, we need to see the market start buying back up. So whenever we see a strong close in price and we inverse that gap and we're getting a clear signal that price is going to go ahead and continue up, and it looks very clear to our strategy, we will enter it. Now, if we chop in the gap, I'm not taking it 90% of the time, even though it is A plus. I don't want to get killed by volume, and that's another key thing. High probability day. No news days or days where you're looking at the 15-minute and it's going sideways. Those are low probability. High probability days is there's red folders. We're sweeping, we're inversing, we're running. Price has a clear direction it wants to go. Whenever we're stuck in the market or there's a lot of news, like last week, for example, that's a terrible low probability week. So we have to have high probability days for the strategy to work. And another key thing also is strong draw of liquidity. So let's say this low was swept and we inversed, but we didn't have a clear draw, or the draw that we really wanted was already taken for the day. 90% or like 60% of the time, I'm still going to take the trade because it will probably play out 50 points if it's high A plus with everything. But a very key thing is to have a strong draw liquidity because the market will target that way. So that was just one to add. And number 6 is the most sleeper part of everything. PO3 entry model. So whenever the new 4-hour opens, let's say 10 a.m., we get our new 4-hour in the New York AM session, macro. Boom. There's been multiple times I've watched this play out exactly. We push down at 10:03, we inverse, we shoot. The new 4-hour just runs. I'm telling you, you catch these new opening candles, these new 4 hours when they first open, and it looks beautiful for price to keep pushing. That PO3 entry is deadly. Even PM plays at 2 p.m. There'll be a sweep and an inverse right at that 2 p.m. open of the new 4-hour, and that shit is just shooting straight V shape, and it looks crazy. The new 4-hour open is just runs. It's like price just wants to pick its direction that day. So PO3 entry model is very, very key, slept on. A lot of people don't pay attention to that, but having a year now of watching this every day, I realized, holy shit, like the PO3 is probably one of the most key parts of everything. And I really just started to learn that a few months ago. Like, I really noticed how much price reverses once we get a new 4 hour of open. So that's basically the main consistencies of the strategy. This was pretty short example and explaining it. I hope I explained it good. I'm still getting used to the YouTube grind, boys. So any questions, join the Discord and we'll run through a session. I will run through a session with you gladly. This is just, the best way I could explain it in my eyes. I hope it all makes sense to y'all, boys, though. I'm going to go ahead and slide us over to some of the examples we have. Get into the examples. First example of the day. Now, these are screenshots I had. I wish I had better screenshots for y'all. I will have to go back, and I'm sorry this video is a little bit sloppy. I love y'all. We're working on it, but I'm going to explain these the best I can, and I remember all of these days. So this day was a day where NQ and ES had a previous day high resting. As you guys can see, I wanted to see an inverse first off this gap, but price strongly pushes. Once I seen this closure here on the 1 minute of price fully inversing down, this is that clear thing I was telling you guys about. Chop. We want to avoid chop. When you see the volume fully come down in one candle and push down like this and start the trend to the downside, this is exactly what you want to see. This was a 10K day. As you guys can see, this was on my expresses. I have 5 expresses. $2,000. This was a huge day. This was a 10K day. This was my break even, and I targeted 50 points for 2,000 P&L on the day, almost, as you guys can see. But this was one of our key plays that have hit recently. This was last Thursday. Perfect example. Also, as you guys can see too, the reason it chopped here and took a little bit longer to play out is you guys got to make sure you guys are watching ES too. Because look, ES got it sweep, took about 3 to 4 minutes, inversed again, inversed to the downside just like NQ, and price rebalanced lower. This day, this was one of those days, man. That key liquidity I was telling you guys about, data. This was a data low. This was CPI at 830. This was a Wednesday. Price came down, swept that opening or that wick before CPI came out. As you guys can see, this is exactly what you want to see right here. When you go to sleep at night, this is what you want to see in your dreams. This is what you want to see every single day for the rest of your life. You want to see a bearish gap get created. Look at this candle here. As you guys can see, price continue down. Boom, we're right back up. And then we get a strong close. A strong close to the upside. Boom. Price shoots up to all-time highs, 169 points. Multiple draws. We have a gap here where you could take profit at 80 points. We have recent AM high here from that data high. Right here, resting. That's 100, probably 140 points. And then 169 points up, we had all-time highs. This is exactly what you want to see. This exact formation of candles. Bearish gap, clean inverse, right off of it. This is exactly what you want to see. And keep in mind, guys, like I said when I was telling you, 10 a.m. Y'all see? 10 a.m. This is where the new 4-hour open. Boom. As soon as that 4-hour open, boom. Look, perfect PO3 entry model. If you're watching this right now, still you're getting the best sauce you could possibly ever witness. Here we go. Another play. This was a late entry. This one is an example I wanted to show you guys because this was a trade that I still had high probability of playing out, but necessarily didn't get the entry I wanted. But I'm still going to explain it to you because it was a perfect example. I just wish I had a better entry on this trade. And I wish I had another screenshot because I took this off of a 2-minute inverse. There was a big 2-minute gap here and I entered there. But we'll get into this example. Now, one thing I just want to say though, the Supreme A Plus is going to look like this. All right. At the end of the day, this is what you want to see. All right. But when you see this, I love it still too. There's a massive 2-minute that was resting in this area too. Price is obviously just boom, boom. As you guys can see, once we got that closure here, I was like, yeah, this trade's going to play off to the downside. We also had a 5-minute that got inverted. As you guys can see on this trade, I just targeted 50 points. This recent low here. And I don't remember exactly how this played out, but I'm pretty sure we swept out all this sell side liquidity here. And another thing about this trade too that made it so A plus is we were sitting in this big red gap that you guys can see up here was a 4-hour unfilled gap. So when price came into it, we got a clean inverse. Beautiful, exactly how we want to see price play out. What time was that? See, this happened at 10 a.m. to 10:30. So at 10 a.m., the new 4-hour open wicked into that gap, got an inverse, and it came right after that 10 o'clock, right after that no PO3. PO3 is a key thing to focus on, boys, but you don't have to kill yourself over it. If you see the strategy, take it. You don't have to overcomplicate it. That's one of the most key things. People try to overcomplicate everything. Just take the A plus. That's it. All right, boys. As you guys can see here, another example. This was a 30-second. On this example, this was a little bit time ago. I don't exactly know what liquidity target this was off of, but I can say from what I'm seeing, um, we had a previous day sweep and we had a beautiful closure on the 30-second to continue higher. This was for 100 points as well, and there was an equal high here on the 30-second and also the 1 minute. And this also came back to fill this 4-hour gap that we just had created. So that was another great example for you boys. All right, this is an example that I wanted to show you boys. This isn't a trade I took, but this is a trade that played out, and the reason I wanted to show you guys this example. So y'all remember this example that I was saying you guys want to see this in your sleep. Now, all of these trades have happened in the last 2 weeks. I want to show recent examples for you boys. There's hundreds of these that I'm going to be releasing a document on in the Discord that you guys can all witness and watch. This is what you want to see in your sleep, like I said. The reason I put this trade in here, high A plus, swept out a previous day, swept out London, swept out multiple liquidity. But do you see this inverse? We're chopping. Volume doesn't look clear. We do get this massive closure candle. This is what I told my Discord that you guys could take it off of. Target here, but as you guys can see, we didn't end up taking out our draw because we didn't get that clean inverse like I wanted to see. And price, I think came back to break even on this trade actually after, break even was set here. After we came back, I think this trade actually broke even. So this is kind of what I was saying, high A plus, but we didn't get the clean inverse and we didn't take the trade. And then one of the last trades I wanted to show you guys was this one here. We had a 9:30 a.m. high. We swept it out and we had an inverse. This was also a clean, it was also in a 4-hour PD array, this play as well. And we had a bullish gap here. We had our inverse and then price played out back downside for about 69 or 60 points. Obviously the draw would have been here, but I cut this trading 2 minis. I was already up 10K on the day. I normally target about 50 points. That's another key thing. With this strategy, I'm trading 1 to 2 times a week. I'm leveraging higher than I normally would. I'm leveraging 2 minis with a good buffer on 5 accounts. The reason I do that is I like to only take 2 trades a week and leverage high because I know my strategy plays out at a high rate. Anyone who's trading multiple times a day, they can be the great traders, and I won't speak on anyone, but trading multiple times a day is going to be way lower win rate in my opinion than a built strategy that you've built that you take one trade, leverage higher. So I feel comfortable leveraging a lot more with this because I know I'm going to trade 1 to 2 times a week or 2 to 3 times a week, and I'm going to win at least 2 of those trades if I take 3, or I'm going to win 1, or I'm going to win both of them, and my wins are always going to eat my losers. That's the last key thing I wanted to tell you guys that was the biggest key out of everything is you can have days like this where you catch these big moves, but then you have days where you take a chop play and lose, or you don't follow your rules. The most important part with the strategy is staying disciplined, following your psychology, following your plan, and only trading A plus, and never trade off of emotion. The most important thing, never trade off of emotion. You only trade based off of your back-tested strategy and what you consider A plus. You never trade off, I think price is going to go up now. No, the strategy proves price goes up now. This is my advantage over the market. Let me get in. All right? You boys remember that because that's the most key thing that keeps 99% of people unprofitable. They can't control that. So once you control that, you will be profitable on the market, whether it's my strategy or something else you've learned. That's the most important rule, is staying disciplined, because you can't be anything without being disciplined. on the markets. But that's it, boys. I hope you guys enjoyed the video. Like I said, free Discord. I hope this video is fire. I don't know. We'll see how it plays out. I'm going to post it, though, because I love y'all and I want y'all to get some content in. Thank y'all for everything, all the love lately, all the people joining the Discord, all the people showing love. It means the world. Really does. And that's pretty much it, boys. We're going to catch y'all in the next one. We out of here.